Hello and welcome to the Weekend Investing Good, Bad and Ugly weekly review for the week ended January the 3rd. A very happy new year to all the viewers. And from our research desk this last 1 week, we had all these fantastic stories to share with you. Pareto's rule applying to income tax stats, case study on Walkhart Pharma, change is the only constant protecting your purchasing power, why people end up making losses, concentration risk is getting bigger and bigger. RBI is letting go of the INR. America still is the mother market. Gains are fine, but what about volatility? And is the luxury market giving distress signals? Some of these stories were really interesting. Do watch them on the Weekend Investing app, or you can also read them in the Weekend Investing blog. There's a daily newsletter that can come to your email. So please use any of these methods to get to these stories. Please also read the disclaimer fully and do subscribe to the channel if you haven't so far. Nifty intra-week view, 0.8% up this week. It was again, I would say a nothing sort of a week, which many days leading to the new year were dull, low volume, and uh, players in the market were playing the markets. And then there was a very nice upswing on the 2nd of January, almost 500 points intraday on the Nifty, some of which was given up on Friday. But that one move from starting from 31st December midday, going till 2nd January midday was, I think, the essence of the last few weeks, that the market is suggestive that it does not look like it wants to go down in a hurry, at least. So it is fighting to stay and maintain this level. As you can see in this chart also, this is the daily chart of Nifty. This is the 200 DMA. And you can see that after a steep fall from September to November mid, we had a bounce, then we had a fall again, and now we are fighting to not let this level go away. So this election day high of June actually is the major support point, and if the market remains above this, I think that will be a good consolidation to have before we launch for the next move up whenever we do that. On the weekly candle, again, you can see that picture very clearly here, that the support came in November, it bounced, it came down. And right now, although we are not out of the woods, but we seem to be hanging around at this range at least. Breakdown below this level of 23,400 definitely is going to cause a lot of concern to a lot of short-term traders, hot money coming into the market, and then we may slide down much further. That may be one of the outcomes possible. But it is also now very much possible, after looking at the last 2 weeks, that the markets may consolidate here for some more time. Maybe by end of this month, by that time, some Trump talk would have come through, whether tariffs on India, how much tariffs, what all gets impacted, and also the budget may come through on 1st February favorably for the market. Let's hope so. Uh, so if those two are not really going to disturb what is already going on, then there may not be much reason for the markets to crack very hard. So this is where the market stand according to me. In the mother market, which is the US market, S&P 500 down 0.48%. But here also you can see that it's a extremely strong and robust market, which bottomed recently in November 2023. And then from there, from 4,000 levels, it has climbed back to almost 6,000 levels. So a 50% gain has come through in a very, very short period of time on the US markets also. So they are also sitting on a lot of gains, and higher highs and higher lows are getting formed there. So this chart is certainly very, very bullish. There is no bearishness on this chart at all. This chart is actually much better than the Indian index chart. Gold is up 1.1% this week in Indian terms, INR terms. So we are at 77.11 for per gram basis. And this chart also is looking very strong. You can see that these are corrective moves that happened, and now we are positioning to go higher. I think uh, in the next year or so, the normal gold returns CAGR basis are about 11 to 12%. But given the current situations that are there, and the polarization of blocks of bricks and US. Maybe gold will continue to go up in the fast-paced range that it has gone up. In the last 1 year, the gain in gold has been about 25 or 30%. And we may see another 20% year this year. That's my thought process. And mind you, gold is going up despite dollar index going up. That is very unusual. Uh, Dollar index is at 109. Dollar index at 109 would mean that dollar is strengthening very, very hard versus other currencies. And usually you will find that once the dollar index takes a downbeat, a down move, gold in dollar terms picks up very, very nicely. And also emerging markets, when the dollar index starts to fall, for instance, maybe September, October 22 till uh, May or June of 23, you would have seen that emerging markets would have done better when the dollar index is falling. So dollar index is another animal in the current situation, which is acting very aggressive. And as this keeps going up, and right now the chart is looking very aggressively positive. So as it keeps going up, more and more dollars will flow from everywhere else into dollar assets, into US markets, and that will cause selling in emerging markets. Benchmark indices for this week, mid caps did 1.65%, Nifty 250 1.4%, Nifty 500 1.1%, Nifty next 50.93, and Nifty at 0.8%. For the month gone by, you have mid caps and small caps still holding green, while Nifty has lost money in the last 1 month, Nifty next 50 even more so. In the last 3 months, everything has lost money. Nifty next 50 the most at 10.5%, Nifty 50 almost 7%, and small cap still not falling. So what is the trend that you can see out of all these charts is that small cap and mid caps are having relative strength versus the large caps of Nifty 50 and Nifty next 50. Over last 6 months also, you can see small caps are up 3%, mid caps are up 2%, Nifty is flat, and Nifty next 50 is -3. And over the last 1 year, uh, last 1 year is where Nifty 50 really did well, Nifty next 50. And then the small caps and mid caps were there. Nifty did 10.8 on this chart. In terms of sectors, now let's see the sectoral view. This week, autos did very well, 3.9%. I think the auto numbers that came out on 1st January has boosted, or the narration that has come out of these companies has boosted the confidence, although numbers are still bad in some spaces. Oil and gas has jumped up 3.4%. Central PSC stocks looking for some budget swaps have run up 3.3%. MNC stocks are up. Indian consumption stocks are up. FMCG is recovering from some battered ground. You can see that FMCG in 1 year is up only 1.1%, which is very, very unusual. Uh, Coming back to the weekly chart. So real estate this week has taken a backseat. You can see in the last year, real estate has done really well at 34.3, and pharma has done really well. But in this week gone by, real estate lost some ground. Pharma still is up 1.1% this week. So most sectors gained this week, barring banks and real estate. The mix of the momentum score based ranking has changed a bit. So this time you are seeing pharma continuing at the top, but autos and Indian consumption stocks, these have come up, and as IT and real estate have taken a beating. So look for opportunities here in autos, in consumption stocks, and in pharma stocks if you are a discretionary trader or investor. In terms of percentage of stocks above various moving averages for 200-day moving average, which is the most widely tracked, Nifty, more than half of Nifty stocks are below 50%. And again, you can see small caps not yet there, but very low range of change between the entire market. So we can say half of the market is really in a bad situation, and the rest half may be in some decent situation, but may not be in the best situation. So when we see a 20-day moving average, there you can see that 58%, 53%, 44% stocks are above 20 DMA. So if you are above 20 DMA, likely that you are in a decent trend. upwards on that. So these trend checks basically tell you what is the health of the overall market in terms of the makeup of the market, and the same should happen in your portfolios also. If most of your stocks are going down below certain whatever rules you may form for your portfolio, it will drag your entire portfolio down. So what you always want is to have winning stocks in your portfolio, and as soon as you can weed out, just like your garden, right? I mean, you weed out the weeds from your flower pots so that the flowers can bloom. The same actually happens in our portfolios also. In terms of the sectors, uh, again, we can see on a short-term basis, pharma, real estate, consumer durables, these are the ones which are doing well. On a longer basis, again, pharma, IT, financial services are doing well. PSU banks are really bad right now. No PSU bank is above 200 DMA, so don't even touch them with a barge pole. Energy is at 10%, public sector enterprise down, oil and gas also. So very, very selective in these areas. Even real estate, which has done well, has only 40% stocks above 200 DMA. So within the winning sectors also, there will be only very concentrated few stocks that are doing well. FMCG is only 46%. If I look at 20 EMA, then you're finding that real estate is at 70%. But in 200 DMA, real estate is very low at 40%. So this means that the longer term health of some stocks may not be so good, while in the short term they may be showing a blip up. So you always try to align the long term trends and the short term trends, and if they are aligned, only then you should be going for those positions. In the large cap space, the strongest and weakest stocks of this week are here. So Adani picking up a lot of positions here. Adani Gas, Adani Enterprise, Adani Power. Bajaj Holdings did well. United Spirits did well. Mahindra and Mahindra, Divi's Lab, Adani Transmission, Maruti and Union Bank. So you can see autos are there and Adani stocks are there, and some pharma is as well. In the weaker stocks, you are seeing cement, commodities, some consumption stocks, uh, and even some real estate stocks along with steel give up. So Hindalco, Shree Cement, Vedanta, Pidilite, GAIL, ICICI, Titan, Macro, and Tata and BHEL. In the mid cap space, you had Crisil go up, Irida go up, IBB Power has returned very smartly, Voltas is up, IRB Infra is up, Lupin is up, Muthoot Finance is up, Kalyan Jewellers, Vodafone is up, Aurobindo Pharma is up. Here again, a significant number of stocks which had been recently beaten down have come up very rapidly. In the losing side, you have Thermax, Sundaram Finance, NMDC, Bharat Dynamics, Phoenix, KPR, Prestige, Timken, Sale, and Jindal Stainless, all losing between 11 and 5%. In the small cap space, you have Blue Star doing very, very well, 13.95%. AstraZeneca, 12%. Tanla is coming back. Tanla was beaten in the last few years quite a bit. ITI is up strongly, 11%. Pfizer is up. UTI EMC is up. Campus, Laurus Lab has been doing well. Clean Science, Credit, Axis Grameen is doing well. On the losing side, again, you have commodities. In copper is there. Titagarh Wagon, 9% is very surprising, running up to the budget. Finolex cables down 8%. Balaji Mean, Jindal Straw, Triveni Engineering smashed down. Cyient, NMDC Steel, Crompton Green, and Raymonds. These were the stocks that lost ground in the small cap space. In the FII DII stats, you can see there was one day of positive FII flow. That was 2nd of January, 1,506 crores was bought. But the last many sessions have been again down sessions. So there is virtually no change in the FII outlook. DIIs have been buying, but in the last few sessions, DIIs have the number has reduced, maybe due to some New Year lethargy and so on and so forth. So that's all I have for the good, bad, and ugly weekly review report. Thank you so much for watching this. Do let us know what parts of this report you liked or you didn't like. What would you like us to incorporate in this to make it better? And do let us know if you haven't subscribed to the channel as to why you haven't subscribed to the channel. And if it's a reminder, please go ahead and do subscribe to the channel. Thank you so much. I'll see you next week. Bye.